Good morning, everybody. It's the 30th of March. We're Signal Centre Talking Ball. I'm Joe Neighbour and I'm joined by Steve O'Hare. Good morning, Steve.
Hello, mate. All right.
Yeah, not too bad, thank you. Bit of a delayed start today. Got a few bits and pieces going on, but want to stay consistent and get this done and have our market chat. Anything that's standing out for you immediately before I sort of run into the headlines?
No, not really. Just sort of the boats floating and 60 million vaccines. That's all I can think about that I've heard over the last 24 hours.
60 million vaccines across.
That
what was that
we've got an order for or something. The UK have got an order for.
Okay, we've done
Boris got an order for.
30 million now, haven't we?
Yeah, we've done 30 million people, and there's about 3 million have got the second dose. I think, yeah, we got an order for the Novavax one. Is it? I don't know. It feels like a Russian one.
Oh.
But yeah, just saw that. That's the only sort of like things I've seen. And obviously dollar index, which we're going to talk about, and gold going lower. That's
Yes, we will come on to those bits shortly. But yeah, as you mentioned right at the start, the Ever Given boat is on the move. It's been moved to a lake just a little bit further down the canal, just for some additional testing to make sure everything is safe for it to continue on its journey. Obviously, there is a bit of a log in terms of traffic jams behind it, and we are bracing for a bit more disruption as a result of that. So I don't think we've quite seen the full impact of it just yet. But obviously, good news that it has been dislodged. In terms of financial markets, obviously we saw this news about investment banks trying to unwind dispositions related to the Archegos capital, and trying to do that without escalating. There was a bit of a truce call amongst investment banks, but that proved to be short-lived, and it ended up being a bit of a fight on Friday afternoon from the reports that we're seeing now, with every business for themselves. And Goldman Sachs, as you can imagine, were ahead of the pack, unloading all of their positions. They've since said that have told their investors that the impact on the financial results will probably be immaterial. I'm not sure that was the case for the likes of Credit Suisse and Nomura, so we're waiting to see what happens with regards to that in the coming days. On the vaccine front, Pfizer and the Pfizer and Moderna shot has effectively prevented coronavirus infections, not just illness. So obviously that's very good news for that vaccine. That's been done. Research that's been conducted over the last couple of weeks or so. Protection even 2 weeks after the first dose. So that's really good. And I guess now we can move on to markets after we've covered all those headlines. We saw a reasonable start, I think, today, certainly on the front foot for equities. What are you seeing on the chart, Steve?
Yeah, run through equities first. FTSE had a positive day yesterday. Initial sell-off in the morning, and we've now seen we're well into our fifth positive day if we manage to get it, closing higher for 4 days consecutively, hoping for a fifth now. Approaching this 68.10 level, FTSE, that's a key level to watch. A break above there, I expect to see stops and maybe an acceleration of the move up towards, and then go hunting towards 6,960. On DAX, also the same, pull back lower, got down to 14,721 before the buyers said that's enough, we're coming for you, and the push towards all-time highs continues. 14,917. We've got the 15,000 as a target level, which is the top of the expanding wedge, if you remember from the weekly chart. So yeah, 15,000 sounds like a big fat round number that we could easily sort of hit today and test and see what happens. On the Dow Jones, again, all-time highs. We hit them yesterday, 33,232 trading at the all-time high. Nasdaq struggling along. Tech side of things have sort of done their load a bit early, and they're sort of like struggling along behind. A lot of indecision going on over the last few weeks in the tech sector, and it's not really getting carried away like the Dow and the S&P are. So will S&P hit the 4,000 level who knows, 3,981.5, just short of the all-time high, 3,988, but potential to have another go today. Yesterday's candle is a hanging man candle, like a doji-like type candle, so indecision, doesn't look too clever, and we're on the back foot this morning, but we've got the US to come in and save us in the afternoon. Here come the cavalry. Overnight, we've seen Aussie 200 get hit, mainly on the back of commodities getting hit, and we can jump straight into that area with gold. So dollar index is pushing higher, up to 93, nearly 93.13, which is always the level we've talked about. We can see the on the daily chart on gold where the positive momentum has waned, and we got a bearish engulfing candle yesterday, and this is followed through this morning, and we've testing the 1700 level, which has provided a swing low on the 12th of March and a reaction higher. Don't think we're going to get it today with the dollar strength in abundance. Potentially we could look to test 1676 if this dollar strength continues. So yeah, that's looking again, just to sort of like a caveat to that negative gold trade. Still think we're in a correction lower, looking for an extension higher over the coming months. So it's not all bad news for gold if you're in there for the long term. Oil markets, we're trading around, we've traded around the sort of like this resistance level on the, this is, let's go on the daily chart, it's a little bit more interesting. We've seen this is the price action we've seen over the last few days. We've seen prices limp up, not really looking too clever. Potential maybe for a head and shoulders formation, very early to call that. Wouldn't get too carried away thinking about it at the moment, but let's think 63.50 potential top before we have a reversal. So yeah, oil, I'm sort of undecided on oil at the moment. It feels a little bit mid-rangey. The negative momentum is stalling. Maybe, you know, we're going to get this continuation higher again. I don't think overall it's finished to the upside. There's still potential for a move higher, especially on the Brent side of things. You know, Brent's still looking to target really the sort of like the high 70s. The only other one I wanted to talk about, cryptocurrency, did a little video on this morning. Quite like cryptocurrency. This is the weekly chart. Potentially, we've seen a fifth wave completion. The reason I'm saying this is because the third wave is never normally the smallest wave. So I'm taking the fifth wave is going to be the shortest because the first wave was really a really big wave. However, and we're getting these hanging man candles on the weekly chart, so they're not really great looking, but we've seen a little bit of positivity come in. So we, in terms of a correction, normally you'd get an ABC correction, something like that, before you start to move higher. We've had the A wave, maybe getting the B now, but if we do break above the high, then this will mean the third wave, we're in the middle of the third wave, we're not at the end of the fifth wave. So I'm sort of like looking down on the 4-hour chart on crypto, on Bitcoin. This bearish channel we've broken above and broken out, and we've stalled around about the previous swing high back from the 21st of February, 58,365. In the last 4 hours, we've posted a really nice bullish engulfing candle. So there is potential for a little champagne bottle being shook up, and pop goes the weasel. This is an inverse head and shoulders formation within this downward channel, so it's more of a continuation pattern rather than a reversal pattern. The continuation pattern, the measured move target of that is 62,800, so that's above the all-time high in Bitcoin. So there's a potential for a little bit of a cheeky little gun to head challenge. That's me, Joe.
Nice one. Okay, so I'll take a look at the FX side of things then. So first up, just look at the baskets, and as you can see, that blue line at the top continues to move higher, which is the dollar index, and everything else is moving lower against it. Although if you do look at the last 24 hours of price action, sort of around here, you can see that things have ticked up slightly. So we've actually seen pretty much all currencies moving higher. Against, well, the relative baskets that they trade in, which is quite interesting. If we take a look at the dollar index on a standalone basis, then again we come back to this sort of continuation higher above this 92.50 level. It is continuing to move up, and we're looking for a move towards this 94.00 level up to 94.50, which is a 38.2% Fibonacci correction from this entire down move here and this break of the wedge. So that would be a nice area to target, I think, on the dollar index. Then maybe what is forming, and I've just sort of noticed this now, is potentially an even bigger bottoming pattern potentially, which may play out on the dollar index. So very early to call that, but that's just maybe something to keep an eye on over the coming weeks and months. If we take a look elsewhere, let's just get some different charts up. We've got this Aussie yen set up, which I'm quite interested in because we saw this break of channel. We have got back into the channel, but we did see this sort of rejection here on the 18th of March. So I'm wondering whether or not we are actually going to see a break to new highs there. If we do, then of course that would invalidate any sort of bearish potential on that. But maybe looking to fade the gains on that today. So that's quite an interesting one for me. I was looking at Aussie US dollar. We've seen this break of trend and also the completion, certainly in my eyes, of a head and shoulders top pattern. And we saw that complete on the break down on that day there, which was the 23rd of March. And at the moment, we are seeing a retest of that upward trending neckline just there, as you can see. So that looks quite interesting as well, potentially for a sell trade on Aussie US dollar. Obviously looking for a continuation higher in the dollar index itself. If we look at Euro US dollar, then obviously, as we have mentioned many times, this is often an inverse look at what's going on with Euro dollar, with the dollar index, sorry. And we're seeing a continuation lower, and we're fast approaching that 38.2% fib level of this entire move here from March last year. So will there be any buying interest or support that comes in between this band here, which comes in at 116.95 to 116.16? That'll be quite interesting to see what happens. And if we look at cable, again, this is another example of seeing a break of a bullish channel and now seeing a retest. And that candle yesterday is really quite interesting because we tried to get back above resistance, and we failed pretty much bang on the underside of this channel. So if you are bearish on that, that would have been a fantastic point of entry. A little bit of a bounce back today, so a bit of a rally to potentially sell into there before a move lower to the downside. So first target would be the 38.2, which comes in at 136.43. If that fails to offer any sort of support, then we'll be looking for a move down to the 50% level, which comes in at 134.58. So finally, I'll take a look at dollar yen because that was my gun to the head idea yesterday. And it has broken above this resistance level that was posted back on the 5th of June. And as I've referred to on a number of occasions recently, what we are doing here is taking out quite a big resistance level that goes back to 2015. As you can see, that downtrend resistance has now been taken out, and I think we can look for a continuation higher in the US dollar versus the Japanese yen. It has been a pretty parabolic move higher from these lows, so maybe there'll be a bit of a corrective move back to consolidate some of these gains at some point, but certainly the momentum remains very bullish on that for the time being. So that pretty much wraps it up on the FX front for me.
Nice one.
Referring to the gun to the head ideas from yesterday, as I mentioned, I did go long of dollar yen. It wasn't a particularly great setup from a risk reward perspective because it still needed to overcome that level that I referred to recently, which was this level here. So while it was below there, obviously that was sort of potential for capping the upside. So that meant that the risk reward on the trade yesterday was about 2-1. And unfortunately, they only got about 0.43R out of that by the 9 o'clock close when we cut these trades off for the day. But fortunately, Steve did a bit better. He got 50 ticks on the FTSE, or 1.43R. I think you only had a 2R target as well, didn't you, Steve?
Yeah, it hit the target this morning, but obviously we cut them out at 9 o'clock. So
Yeah.
yeah, no, I was quite pleased with the way that sort of like reacted yesterday.
Yeah.
I could have had
Did
the stop a
nicely.
little bit tighter, maybe around the 6,700 level, and it would have been a better return. But no, happy with that.
Yeah, lovely stuff.
Stopped the rot,
So
didn't we?
yeah, well, I mean, we seem to be finding a bit of support along here, which and these maybe a bit of a wedge formation going on here as well. So hopefully we can break up and catch a few of these moves. Certainly seems to be some interesting patterns emerging on the technical front on the longer term chart. So hopefully that will lead into some decent wins on an intraday basis. Steve, have you got an idea ready?
Well, yeah, I mean, I've been talking about the cryptocurrency and sort of like breaking this level, 58,365. If I go to the daily chart, obviously we look at the ATR levels, this envelope which follows the trades along, which really they're the sort of levels we want to be sort of getting long and getting short at. We're right in the middle, so that doesn't really help. However, this is definitely just, I think if we broke above 58,365, go with the flow. So we haven't broke above it as per now. So I think it's a good risk reward trade to set a short at. So if we put the stop in 8365, that is where the stop is. So it's pretty damn tight. It's like almost just a two or three ticks higher, and the spread is 100 ticks wide. Then you're buggered. And then look really for maybe a move down. I don't really know. So if we move down to 56,000. 865. Don't know why I put 865 in there. I tried to, yeah, but I'm trying to get it 56,000. There we go. 3.11 to 1. 3.11 to 1. So yeah, targeting a move to 56,779. The stop is at 58,365, getting short at 57,979.
Good luck. I'm going to take a look at Aussie US dollar. Just sort of going through the setup on that on the daily chart first up. Obviously, again, mention this break of channel, the yellow lines there, and then the completion of this head and shoulders top. Now, if you look at the price action over the last couple of days, yesterday we formed a doji candle, and today we've had a retest of the neckline yet again, and seem to be failing as it stands at the moment. So for me, I think the chances are that we're going to see a continuation lower in that over the sort of short to medium term. So drilling into the intraday charts, this is the hourly chart, and just drawn a couple of lines on here to show a bit of a consolidation higher and then a breakdown. We're seeing a retest at the moment of the underside of this channel. I mean, obviously this is ultra short term, but I like the fact that it's got a decent setup on the daily, so I'm going to try and sell it here. It's currently at 76.36. From an intraday basis, maybe we could target this low that we posted on the 25th, which comes in at 75.48. But because of the setup on the daily, I think we can be a little bit more aggressive and just hope for a bit of a washout on that maybe today. So going to target 75.00, which is 4.2R if that plays out from here.
Nice one.
Stop loss, just to confirm, is at 76.70.
Coolio.
Let's see what happens. So is there any news out today that's going to impact these trades? Well, at 1 p.m. we've got German CPI. Prices are expected to rise 1.2%. And then at 3 p.m. we've got the US consumer confidence figure, which tends to be quite a big market moving event. The index is expected to rise to 95.9%. So a couple of bits to keep us on our toes today. Other than that, I think we can wrap it up for the day, Steve, if you're okay with that.
Nice one, mate. Yep.
Cool. Right, well, we'll be back tomorrow morning. Until then, trade safe and have a great day.
Cheers.
Bye bye.